Hey, welcome back to the Hub channel. My name is Brandon Burton, and we have an amazing show ready for you today. Obviously, as you know, we're doing this live as the market is moving and messing around with everybody. But I have Rob Roy here with me today to go over what is going on in the market. Rob, it has been a crazy week. Obviously, we have CPI data come out. We have some other things happening in the market. We have numbers going up, numbers going down. People are worried about inflation. People are worried about deflation. What's your take on what's going on in the market, and what are we going to be looking for right now?
Well, happy Friday, Brandon, and hopefully my voice makes it through. I'm sure everybody's aware that I'm dealing with bout 2 of COVID, so the second one was a little bit tough. But as far as the market, you hit the nail on the head. We had a tamer than expected CPI. We had a tamer than expected PPI, which I always want to encourage people that you got to watch both, because if prices are coming down on the consumer side, but they're not coming down on the wholesale side, that compresses margins, right? So if the wholesalers have to pay more but can't pass it on to the consumer, that's a problem. But both of the numbers came in better than expected. And now I think the problem that I see that I'm concerned about, Brandon, is the fact that the market is pricing in 100 basis of rate cuts next year. Now, the Fed is usually late, right? They go far on both sides. They don't get the timing right. So to expect the Fed to cut 100 basis points next year, I think might be a little excessive. And I'm concerned about how that may play into the fact that we've had this vertical move up in the market as it is, with 3 gaps. And, I've talked about these gaps before. Don't like those. Vertical move, and the fact that the market has been that aggressive on rate cuts. And that's coming from the fact that, we have guys like Jeffrey Gundlach and Bill Gross talking about a recession coming at the beginning of the year. Then we had Walmart that warned about consumer spending, and which really took a big hit out of Walmart. So, there's some concerns, and I can understand pricing in some sort of rate cuts, but 100 basis points, I don't know. What do you think? But it's certainly driven the market this week and last week as well.
No, 100 basis points, that's aggressive, Rob. It's hard to foresee, and I think it would have to depend a lot on, obviously, the macro picture of what's going on in the world at the time too, what we're looking at. But to see 100 basis points, that's super aggressive, and I don't see them reversing course or making a pivot that quickly, that fast, that much. But just like you said, what's that, Rob?
I was just going to piggyback on what you said, because the Fed has actually cited the 70s. When the knock on the Fed was that they started cutting too quickly and inflation came roaring back, and they've really been adamant about they don't want to make that same mistake. So, maybe 50 basis point. I don't know. I do see a cut next year, but I don't know about this 100 basis point thing. And I'm not this Fed. Said so far.
I mean, I see them holding right here where we're at for the next 2 quarters. I honestly do. That's where I see it at. And then maybe a quarter basis point all of next year. I think that would be the safest play. Otherwise, I think that you have a risk of some variance of hyperinflation coming into the market. And if that happens, I don't know that we've ever really experienced that in the U.S. And so I think that could be problematic. So they have to be thinking about that as well in terms of the market and overinflating the market and everything else in relation to the dollar. And then if we use the dollar as the global standard, I think there's a problem there. So I don't know. I don't want to dive too much into my philosophy and theories there. But.
No, I'm totally with you on the hyperinflation thing. And it does play into the Fed's mentality here, right? Because, they just threw the kitchen sink at everything with COVID and everything. And now that they've gotten inflation somewhat under control, are they really going to risk turning around and being that easy on money? I don't know. It just doesn't make sense to me, but that's what the market's pricing in right now.
Yeah, we'll see what happens, I guess. Let's check out. We got a couple of questions here. We got rum. It looks like Manuel Costa wants to take a look at rum. Do you think it's the bottom, or do you think this is kind of a dead cat bounce? Is that what we're looking at right now?
Well, yeah, I think there's probably some dead cat bounces going on, but this $5 level is such a key level. I don't know what the nature of institutional ownership is of this. I feel like it's fairly significant, and so the $5 price level becomes important because institutions that have the investment objective of aggressive growth can own $5 stocks, but they can't own them lower than that, which is why every time you see it break 5, it gets bought into, and they keep trying to push it above 5, because if they don't, there's a time limit. I used to know what it was, Brandon, but I don't remember when they're forced to sell if it stays under that price limit for an extended period of time. So that's what you're seeing here. Every time it comes under 5, they buy into it. And so that's right where we are now. I feel like it depends on how committed are the institutions to this. And maybe, a stock like this can catch a bid if we go into more recessionary times when people are staying at home again. Netflix, other stocks like that did well during COVID, and you get a stock like this, you could see where maybe, people at home on their computers, and perhaps we can get some sort of a bounce up towards 7. The key that I would keep an eye on, if we get below 5 with follow through, and then you see a big, huge volume day to the downside, because you saw some institutions bail at 7. There's the volume there. But note that all this stuff over here, the only significant volume is the buying side when it's broken below 5. So if you see a break below 5 on big volume, I think that's the institutions bailing and you got to get out. But could we have some sort of a bounce up to 7? I actually could see that on this. If you've got speculative money just laying around, and anytime you're trading options or anything, you should only be trading money you can afford to lose anyway. But if you were looking for something really speculative, you could take a shot here and see if we could bounce to 7. I don't know that we go above that, but you could see that.
Yeah, I mean, looking at those, thanks for that. Thanks for that chart, that call out, Manuel. I think I like that, and the $5 level, obviously one that we're all watching all the time on these charts. I know we've looked at run before, and that's going to be a level that everybody's watching now, technically. So that's interesting. Let's take a look at. It looks like Will wants to take a look at gold here. What's going on with gold on the weekly chart? Do you see this as a play? Obviously, and Will's a little bit concerned about making a play before Thanksgiving, which I'm not adverse to, obviously. Who wants to make a play before Thanksgiving week? You never know what happens.
Yeah. Well, I've been just chomping at the bit to have some reason to really go all in on these metals, because they just haven't done anything, as you can see, for the entire year. And then you go back to last year with even worse. And so the 185 is just such a sticking point on GLD. Every time we get there, we get turned back. We tried to make a couple vertical moves here in April. That got turned back, one in May. And then we broke below it. We tested it in June, tested it in July. We're here testing it again in October. We have to get above 185 with follow through. And then I think once it finally does happen, they take off and run, because it's been so long since there's been a run in the metals. And I think you could see that, but it's got to get above 185 first. And that's the key. Just watch 185. I'm rooting for it, but I just feel like it's an easy upside trade if we can get above there. But so far, we haven't been able to.
Yeah, I think I agree with you. That's a good line in the sand to draw, and then play the upside on that after that. I like that play. Let's check out U.S. oil. It's funny, we got a comment this is just a side comment from Fluffy Lolita. Notices Americans always taking profits before big holidays, so waiting till after the holidays to make a play. I don't. That's funny. Anyway, that's a side comment. But it looks like, let's take a look at U.S. oil. What's that? Yeah,
that's an interesting comment. Yeah,
Yeah.
And looking at oil, we're down here at 70. We're right around a 61.8% fib retracement here on the wave 4. And we're also at an area that's acted. Look at how 70 has been support resistance going back well in the last year. 70 is such a key level here. And so if you're, this is kind of similar to the Rumble thing. If you had a little extra money laying around and you wanted to take a shot at something, perhaps oil makes sense too. If the consumer's going to be okay, and Walmart said they're worried about Amazon's been in there okay, but if the consumer is going to stay strong, how is oil dropping like this? So if we get some sort of a bounce, I think there's a bounce up to 75 because that's where the 50 average is there, the royal blue line. Then we would have to look and see, do we have enough momentum to get up? We do have a qualified 5-wave pattern to the upside here, and we're at an area. If oil doesn't hold here, then we're probably down at 65 or 60 on oil. And based on what OPEC has told us, they don't want to see those prices again. And I wouldn't be surprised to hear OPEC come out with some comment on, restricting production, whatever, just with the fact that we're down here at such an important level of 70. So if oil's going to bounce, if USO is going to bounce, this is where it should bounce from. And if it doesn't, then, lower lows to come.
Interesting call there, Rob, and I like that read. That chart looked beautiful, the way you had that set up. It looks like 4. Okay, so watch for a bounce right here. We're looking for the upside on oil, and if it's going to bounce, it's going to bounce right here. So hopefully that answered all your questions there. Not a lot of more questions in the chat there, Rob, but I think what you gave us so far was actually really good for today's show. People back and forth on the American selling and losing time decay on options over the holidays. I get that. That's what's happened to me. Anytime I've traded options over the holidays, it feels like the time decay just eats me alive, and there's no sense unless I have some sort of a spread on that works to my advantage. So that's interesting. So anyway, Rob, thank you so much for dropping by the channel today. And if you guys are here and you haven't subscribed yet, by all means, subscribe to the channel. HUBB, we're growing our user base, we're growing our subscriber base, and we're really excited. Couldn't be happier for the year ahead that we have to offer you guys and all the new people that we have coming on the channel here. And Rob, always a pleasure to have you on here. And we will see the rest of you guys next week here on the channel for more great content.
Thanks, Brandon, and congratulations. I do see that the channel's growing, and you're awesome there. Your Bitcoin behind you is not doing so poorly either. So I know you're a happy man.
We're doing good. We could talk crypto for years if we stayed on here, because I'd be all over that.
We can have a live show sometime, and we can chat about it, and you can probably educate me on some crypto stuff. But thanks for having me. I appreciate it. Enjoy your weekend.
Yep. We'll see you guys later. Bye-bye.
Bye.